So if no more questions, I'll just bring this TOS file. All right, here. Let me delete these. All right, cool. All right, so we're gonna go over volume profile quick because a lot of people are interested in this. So you heard a lot about dark pool. What is dark pool? Dark pool is nothing crazy. Okay, we look into dark pool. Okay, so what is? Let's say what is dark pool first. So let me open this. 1 second. I'm gonna show you something cool. If I still have it. Oh, I don't have it. Okay, never mind. So if you actually have Fidelity, you can look back into look back into times and sales. You can search for different times and sales, and then you can see different reports. So what is times and sales? Times and sales is your tape, and your tape tells you when every time an order goes in. So this is your level 2. Your level 2 tells you the bid and ask, where people are actually willing to buy or sell. Okay. For example, Nasdaq is saying, hey, I'm willing to buy spiders for $293.65, and my size that I'm willing to buy is 3. Okay, 3 shares. Okay, so you have your level 2, and then every order that goes in immediately gets reported on your times and sales, and this is your tape. You can filter to any size you want. Okay, and then after you see these going in, you sometimes see orders coming in that's like, for example, like price of spiders is $292.44 right now, but you see a million share just got bought or just got sold, and the price is completely different. You're like, okay, so how come I just got a ticket come in, I just got a print that just came in, but the price is completely different? And that's a dark pool. So those are large, very, very large orders that they don't get reported right away. They take a day or so to get reported, and then you finally see it in your times and sales in your tape. And those orders, why do they get reported late? Is because the amount of the shares is so large, and the amount of money is so large that goes in, that they cannot just go behind the computer and press buy to buy it. Those are institutions buying, whatever, institutions, hedge funds, I don't know. Whoever is buying those, they have to go through a lot of steps to put in the money. And don't expect those people to just put in the money and pull it out. Because if somebody's going in behind different steps to enter in a trade, remember they have to go through the same steps to get out of the trade as well. So so those are the dark pool. So when do dark pool orders happen? Those are the levels that you can see based on volume profile. Now, volume profile is not dark pool. Okay, that's 2 different things. But dark pool orders usually happen where there is the largest volume in that security or whatever it is, ETF or whatever. So for example, like in spiders, you can see where the most trades happened, and usually those are the levels that I mean, if you check your dark pool, I mean, I don't have access to that. Ben does. Like we can look into Flow Algo or the other the flow scanners. They will tell you where all the dark pool fall, but they usually happen where there is the largest amount of volume. So we have the regular volume. So if I put it in here, volume average. Let me see what's. Okay, so we have the regular volume. I personally have no clue how to use this. I know people that swear by regular volume, but my question is this: this volume is totally based on time. So on this day, on February 28th, we had a lot of sell volume, right? Which is here, okay? And then here we had a lot of buy volume where markets start rallying, blah, blah, blah. But I'm more interested in this, in the volume by price. They call it volume profile or volume by price. And what this tells me is where there's the largest trades happening in the market. So what are the largest trades happening in the market? Okay, look where is the largest trades happening. We have one right here, right? We have one right here. We have one right here, here, here. You can just pinpoint every exact area that there was a lot of trade. Now, what do we call those? You know what we call those areas. You just never thought about it in terms of volume profile. We call them supply and demand. Okay, these are the areas that there is a lot of interest for those who are entering the market, whether for trading, whether for investing. There's a lot of interest here. And then when you see gaps like this, those are the areas that there were not a lot of opportunity for traders or investors to get in, or they just weren't interested in those prices. So for example, if somebody's asking you, would you like to buy this stock at this price? If there is no interest in that area, you see these gaps in the volume profile. Now, what's so interesting in this is that we call this supply and demand, okay? Now, what you can do trying to use this is look at this area. As your demand area, as a supply area. There's gonna be a lot of sellers sitting here, okay? And then anytime you see these large volumes below the actual price, those are your demand areas. Those are the areas that the traders are willing to buy into again, okay? So why did we get a correction here? So remember, the top of the volume profile, the large volume profiles, okay, those are your resistance or supply area. And you can, even if you don't use it, you can just pinpoint it with your own eyes, right? This was resistance before. These are supports before, right? There's one here. You can do like one here. Then you can do like a support here, okay? Now those exactly matching your volume profile, right? So even if you're not trying to go based on your chart, you can pinpoint these areas, just the largest volumes, and these areas are gonna be the areas that they're gonna be selling into. Every time we hit these levels, they will sell into, and if we break these levels, they will become your demand areas, the support areas later. So every time we come back to it, what are they gonna do? They're gonna buy into and then push it higher, okay? So these are also the areas that there was the most trades, and that's why we call them the areas that those are the areas usually the dark pool happens, right? So there over here, for example, there was how many zeros in there? There's 368 million shares was bought, like traded. Let's not say bought or like sold. Let's say there was these many shares traded in S&P at this price. So why do I say this is more important than your volume average? Is because the volume average is telling you the volume of that day or time. It's based on time. It doesn't matter. Why does it matter for a trader? It doesn't. This matters because it's telling you the levels that your supply and demand. So now what I do personally is when we do hit these levels, okay, I look at my tape. I look at my level 2. I see, are there more sellers jumping in that security, in that stock? And if they are they actually getting a fill, or they're just putting it to just scare me and you, and then they buy right back into those levels? So look at your time and sales, look at your level 2, see if they're getting a fill. You see large order. Again, you are going to see large orders into these levels. you're not going to see like a 5 shares of SPY got bought. You're going to see 250 million shares got bought. You're going to see 250,000 shares got bought. 1 million shares got bought. We've seen it over and over. So these levels are the most important levels. So if I want to make it a little bit more complicated, you would say this is an area. This is an area of interest in supply, okay, sellers, okay? Now, if we break this one becomes support. This one still is a resistance. We break this one, we enter a new area. This will be the new area. And the fastest possible trade that you're gonna have is when you enter this gap. When this one breaks and this one breaks, you will see a quick jump to the next volume profile. So from one volume profile to another volume profile, the jump is very quick. But always remember, if you are in a one volume area, you're gonna be stuck for a while. Look at this. We've been stuck in this level, right? This is a large volume area. We've been stuck in this area. If we exit this, this is gonna be very quick. See, we hit the top of it. That was a resistance. We came back right below it. And since we broke this area before, this now was a support, right? So we came, we hit the bottom of it. This was a support. They bought it right back up. And now we're testing the top again. We're testing the top of the volume profile again. So both top and bottom of each volume area are your supply and demand. When the bottom of it breaks, so remember, the first resistance is the bottom. The second resistance is the top. Then if we are able to finally get out of this bump, I call it a bumper, it's hard to get out of this area, okay? Then you will enter a new area of supply and demand. This is a supply area again, okay? There's gonna be a lot of sellers sitting here. So remember, if we are finally able to get out of this, there's going to be a lot of sellers right here. They're going to sell into. Don't start buying here. If you enter here, don't buy here. Be careful, because you might be that bag holder. You might be that person that you're going to be stuck holding an option or equity, and then get a correction back to this level. You're going to get a correction here, or the top of it most likely, because this was a resistance broke, this was a resistance broke, and now each one of them are supports. So you got to get a correction here and then come up, try this again, and then go higher. Don't be the bag holder here. If we do reach this 300 level, and if you're holding from here, for example, I bought 305 calls right here, okay? Now I'm looking into sell some here and then sell more here, okay? Sell all here actually, if we do get to exit out of each one of these levels. But these are big levels, big large volumes, large interest in the sell side. So if you want to make it like pretty for yourself, so you can do like, hey, this is a demand area, I'm gonna make it a red, and this, and this is gonna be demand, okay? And then this is a demand, same story. And then any large volume below, those are going to be your supplies, okay? Now, you can easily just look at the chart and pick those levels. See support, or actually you want to be precise about your levels, and then you can look into your volume profile. But volume profile, match it with your times and sells. Are you seeing actually buyers? Like yesterday, what happened yesterday? I mean, we were looking at the market, right? I was looking at the market, and I was looking at the ES. I was seeing stuck here. We saw this pullback, and I was holding a lot of calls. I was holding calls of SPY. I was holding calls in Starbucks, Twitter, Alibaba, Beyond Meat. My entire option account was in calls. And I was looking into start buying puts to save myself. But what I was seeing was tape. What I was seeing was the times it sells. and all I was seeing was buyers. I was seeing way more buyers than sellers. And then we were looking at the volume SPDC, which is a tick chart that Suma showed us an entire day. So this is the S&P buyer versus sell volume. Okay, so these are actual buyers and sellers. Okay, so this day we saw S&P we saw S&P going higher and higher. Okay, and then right before close we got this huge sell-off. We sold the entire day. So the market, I'll go back to S&P, I'll go back to ES. Okay, here. So go back to ES hourly. Okay, that was this day. Okay, we rallied. Then at the end of the day, we flushed the whole gains of the market. We flushed. But you know what happened? We were looking at the volume SPDC. We were looking at the actual volume happening in S&P, and what we were seeing all day was this: sell. Meanwhile, the volume was going up. So if you were smart, you were looking at this, you would be like, all right, I don't believe what's happening in S&P. What I'm gonna do is actually when I think we reach the resistance at top, that's when I'm gonna short it. And right after we got that flush. The entire day was flushed. In literally like 5 minutes, we flushed the whole day. So that's the same story with Friday. Friday, all we did was sideways move. Hit the resistance, they sold into it. Hit this resistance, we sold into it. All I was seeing was level 2. The bid side, the size on the contracts was 300. The size on the offer side was 10. And then on times and sells, all I was seeing was buy. But what we were seeing was sell into. And then I had no idea that Trump was talking, but a lot of times when there is a news coming in or somebody's going to talk, we see a lot of the sideways action. So look into your tape, look in your volume. Where are the actual buyers and sellers? The market will move eventually based on buyers and sellers. You're not gonna see the market just going down by itself. There has to be a force behind it, right? So who pushed the market up? Fed, right? You were saying Fed. Look at the amount of volume happened in the past month. Do you see this buyers? Do you see this buyers? If you were looking at this, you wouldn't be buying puts in the market over and over and losing money just because of your feelings saying, hey, we're gonna get a leg down. We're gonna get a leg down. We're gonna get a leg down every day. And you see all these buyers jumped in after, like right here. So we saw these sells, and then these buys started jumping, and it just got more and more, and then sells started to disappear. And now this, if you go to the monthly chart, this is the first month that we haven't seen red at all. So that's why I say there's more likely that they're not gonna even bring this down. So again, these are the buy sell volume. We're gonna look into it, but overall, just be on the right side of the right side of the trade, right side of the market. Don't try to fight the trend again. They say, right? What is a trend? The trend is lagging, right? You don't know where the trend is gonna go eventually. The actual trend is who's on your side. Who is the bigger players are on your side. Let's say Fed, okay? Is the Fed is on your side, or you're just trying to fight it? So again, volume profile, supply and demand. When you hit those levels, you're starting to hit those levels. Watch your tape. Are you seeing a lot of buyers and sellers jumping in? Then look into cracking those levels. Can you explain volume profile for 240 and 260 area? 240 and 260 area on SPY? Let me look. 240 and 260. Here? Is that where you're asking? So we have this whole huge gap. So if we come and we start breaking these levels, like let's say this level, okay, then we see this gap, right? We will flush down all the way to here. So we will flush down to 260 and we start getting another leg up if they buy into it. So this will be another level of buyers. Now I want to show you something very, very cool. If you were actually really good at this, okay, you were confident, look at this level. This is the monthly chart, okay? You see this level? This is one of the largest levels in the market, in S&P. Look where they bought it back. This is a monthly chart, right? This was the largest demand area. Right when they hit it, they bought the market back up. Okay. Now, if we break this again, this will be the next area that they will hit the top of it and they buy it back up. And now, since we are below this is our demand area where the sellers are at. Okay. So now we've broken some levels into it, right? So every one of these ticks that you see are levels, okay? Every level, every one of the ticks are those dark blue levels that we talk about. So every level that we've broken, like if you go back to the daily chart, these are the levels that we broke through, okay? Now, those are now supports. So going back to the monthly chart, this is another level. We broke above it yesterday. Friday. And now, next slightly interesting level is going to be here. And then we still haven't fully broken out of this volume area. So we can say here and here. So that 296 that I've been talking about, that we have to break to go back to 300 level, is these areas. So we kick this out, then we go to this level. You see that large volume. There's going to be some demand there. Sorry, some supply there. If buyers jump in, we'll push it to this level. If we break this, go back to all-time highs. Personally, if we break above 296, I'll start to just add into a lot of my positions. We break above 300 levels, that's it. but you see why the market got got bought back up. So again, a lot of trade happened here. Look at these are monthly candles, right? Look at how many candles you see in here. There's a ton of trade happened here, right? Now the fact that there was a lot of trade happening here, millions and millions of dollars, billions of dollars was spent here. Okay, so that's why when we hit this level, all those buyers jump back up, because these are the people. There are people that bought S&P, okay, bought S&P right here in the market, okay, years ago. When is this? This is 2014, okay, all the way from 2013 to 2016. There are people that are holding in this area. Now, every time we hit this area, all those people, what are they gonna do? They're gonna add into their shares. Every time we hit this level, they're gonna add in. What do you think all these people that are holding here have power in this market? They have a ton of power. There's so much volume in this area. Every time we hit it, they're gonna buy it back up. So that's why Goldman Sachs said the bottom of this market is at 2000 area. Look at it. They were right. They were right. You see this large volume? It ended right here. Look where they bought it back up. Can you please go over a time frame, because each indicator shows something different? Yes, so that's a very good point. So that is why I always say, do not use your volume profile in the 5 minute or 1 minute. They're not gonna work. They might work like this, like if you be like, all right. The problem is that they are lagging, right? And they get updated every 5 minutes, because as you see these trades happening, as you see these moves in the price action, the volumes start to pick up, right? And these are updating in front of your eyes. This is going more and more and more, and then you see this breakout and you go, okay. But they're not gonna work because they're updating in front of you and they're lagging. That's why You look at them on a daily chart. The daily volume profile matters because it's using previous historical data, right? Indicators use historical data. That's why they work better in the longer term. But personally, I like to do this. And I told a few of our members that what I do is look into these peaks, right? Mark these peaks in the bigger time frames like monthly and weekly. I'll do monthly and weekly, okay? Since I'm a swing trader, I look into monthly and weekly. I pick these levels, right? Right here. There's one right here. There's one right here. One right here. And then you can save your drawing as like levels or whatever you want to call it. So if you go back to your regular drawing, you're not going to see those levels, but you can go back to it and see your levels. And then after I pick my monthly, then I go to weekly. I'll do the same thing on the weekly. There's one level right here, and you are gonna see be like, all right, you're making the chart so messy. But the reality is, yes, you're making your chart messy, but you're gonna not be losing money just because every time you start buying into resistances and then you get screwed and you lose money. So that's totally up to you. So now you have the weekly and monthly levels. Look how they happen, how they work in the environments. Look, you pick the perfect supports and resistances into the market. You see this? These are perfect levels, right? Every time we hit into them, whether we bought or sold into it. Okay. So personally, I do monthly and weekly, and then I go to the daily and then just act based on it. See, this is a big level, right? One right here, one right here, right here, and then in the future, this will be the demand areas. Why? Sorry, the supply area. Why? Because we are below it. So yeah, bigger time with volume profile, bigger time frames. If you're a swing trader, monthly and weekly, then go to daily. If you're a day trader, same story. For day trading, what do? You do daily. You pick the daily levels, right? And then what you do, like for example, like if I can just see this. I hate volume profiling TOS, by the way. But overall, then what you do is when you pick the daily, you do the 4 hour. So you do two time frames, daily and 4 hour. Then you look at the smaller time frames and you act based on those. You see this breakout, jump in, buy, because you're gonna like, for example, right, this is gonna be kind of a swing, but like every level that breaks in the daily or 4 hour or like 1 hour. So if you're a trader of 15 minutes or less, then you go to 1 hour and 4 hour. If you're a trader of 4 hour chart, then you do a daily chart. So you go one or two time frame above for that. That's my, and then but personally I like, one sec. I like TrendSpider's volume profile much more, just because it's clear. Okay, so you see the amount of volume is telling you right there, and this every level breaks, you go to the next level. Then next level is here, then the next level right here. Then we have this gap, and then after this level breaks, then you can just buy into the market. Why? Because there is not much volume here. There's just going to be a shoot in the market going back up, and then since this is the level that we have the largest volume, below this there's a gap, so we can just pull back all the way to this 251 area again, which is slightly some volume back here, or maybe first this level, since there is this gap here, ends here, and then we start getting some levels again. This is a TrendSpider's volume profile I like. But then they have this anchored VWAP and blah 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 blah. Yeah. So any question, guys, on this? Can you please go over the sequence counter? Oh yeah, for sure. So I'm still new to that. So I know the niners. When you see a niner, that means trend exhaustion. You might get a correction, or like here, you might just go sideways for a while, for a few days, right? Before you go up again and come down. But you see, after we saw this uptrend, you see exhaustion, then we see another uptrend, right? Or you just might get 9 and then just get a complete reversal. You get a 9, you get some exhaustion, or like just small rally right here, like right here, and then we flush back down. Same story here. So every time you see a 9, just be careful, right? If you're long in this, if you're, for example, you're long here, okay? You're long here, you see a 9, start taking some profits. Okay, it's just be safe, be careful every time you see a 9, and that's true in every time frame that you do use it. Now, the rule is making sure the 9, the close of the 9 is higher than the close of the 6. So let me go to 1 day, 6 month, zoom in. The close of the 9 has to be above close of the 6, which is here, true here. So, and that's why we got a quick reversal, exhaustion, we moved higher. And then this is the same story on the downtrend. You see a 9, just be careful, okay? Like, so let's say you're short in here, you see a 9, just be careful. How to identify trend and trend reversal. Can you please go over? Okay. All right. So let me tell you how I personally trade. Everybody has different strategies. I trade like this. I'm an aggressive trader, right? I don't use indicators. My only indicators I use is this and my RSI that you see right here. This is the RSI that I made myself. Just a regular RSI based on 25 period, and then I added a moving average. But what I do is usually in an uptrend, I buy into every pullback into those demand areas, right? Those demand areas right here, right? Every demand area I see, like right here, I see one right here. These areas that you see a pickup in the volume, those are your demand areas. So every time you see a pullback on those levels, I start buying, but I also make sure I see those levels in my trend lines. So not you have two types of supports, right? Support and demand. There's one that is a trend line. There's one that's a horizontal support and resistance. So 1 second, somebody's messaging me. Oh, but yeah. So I buy into supports. I look into to see buyers, right? Every time I see buyers pulling in, like let's look at Twitter or Starbucks that we just got a trade in, right? Where did we do? We bought on Twitter on Thursday, okay? We bought right here. I told everyone, hey, I'm gonna be a little bit aggressive with Twitter. Same with Starbucks. Same with Starbucks. See, I drew this for myself. But I was like, hey, I'm gonna be aggressive with Starbucks. I bought it right here, okay? I bought into this pullback. I saw this pullback coming. I looked at my tape. I looked at my times of sales. I saw buyers jumping in. I bought this right here on Thursday. And then Thursday and Friday, we started seeing this move, okay? Now, what I need is this trend line to break, okay? And the top of this volume area, which is a big level. If you go back to like a 1 year daily, you see this level this is a level that there's going to be a lot of demand in, right? And then we have this gap. Supply in. We have this gap. So I want to look on Mondays, see if we see buyers jumping in more and more on times and sales, and then maybe I can add into my contracts right here, okay? And then quickly fill this gap and go back to this new area. And then this is going to be a new supply area where there's going to be sellers. Maybe they sell it back into this again. I'll buy again right in here. So every pullback I see in an uptrend, I buy. And if I'm trading a trending a downtrend, give me a name that's trending down. UAL, let's say, right? UAL. So same story like here, right? So for example, let's say this is, for example, or like, I don't know, this is the new downtrend, okay? And then if UAL start to hit this and I see a lot of sellers jumping in, okay? And look, this matches your supply area, right? Your resistance area. We hit, we see a lot of sellers. I short it, bring it lower, you know? Again, aggressive way of trading, but your risk is not that much actually. Because if this is breaks, it hits, right? and it breaks above it, you just jump out. You haven't lost much. But what most traders do is, let's say I don't know, Twitter, right? Twitter jumps, right? A lot of buyers jumped in here, they bought it back up. Most traders, they realize, oh, Twitter is going up, let me buy it. They start buying here, and they're going to be the back holder into this loss, bring it here. And then as soon and they see this coming down, they jump out of the trade, and what happens? Buyers jump in, bring it back up. So it's the story of all the retail traders. Any questions? That should be it for today. I think this was 2 hours, right? Or what? An hour and a half? Yeah, an hour and a half. Any question, guys? If you have questions, you can type it in. Can you share your RSI setup? Yeah, I will. I have shared it before on our group. I will share it again for sure. Any other question? Which always shows only one side. Okay, yeah, I went over it the other day. So a lot of you guys have only one like this, one size on your level 2, one row. What you do, you go on TD Ameritrade website, and you apply for NASDAQ real-time level 2, and then you get all the level 2. So you want to have that. Anything?
Okay, so if no one else have any questions, I just want to say thank you to Ali for sharing your ideas and your opinions with us. It was very helpful. If anyone else have any questions, just put it in the chat and Ali will answer your questions.
Yeah, for sure. No problem, everyone.
So we were supposed to do another one tomorrow, but Burma decided that it's better to do it next week. So the people who couldn't make it to today's conference will have time to look over the video tomorrow, and you guys have more time to observe what we shared today. So next week we'll have, I think Burma will be sharing about options and Greeks. So stay tuned for that.
Definitely. And somebody just asked a few times about the pre-market levels. So your pre-market levels, so you see I have pre-market turned off because you see a lot of noise happening in the pre-market. If you are trading pre-market, this matters. The pre-market levels don't actually matter. I know a lot of traders do actually use the pre-market levels, but the pre-market levels actually go based off these volume areas and your actual market hour levels in the future. So they do relate. So if you're, for example, like I own a good quite amount of Uber, and I'm not holding it for a long term, but I bought it right around here, and I sold some right here the other day when they beat their earnings. Now I did look at the pre-market levels, because of course, I mean, after hours, because that was where earnings happened, right? So as soon as I saw this pop, I sold actually right here. I saw a lot of sellers jumping in. I used the Pitchfork, and that's when the pre-market and after hours extended time matters, because you're actually trading it. If not, look at it. So you see this trend lines that I have here. The day after, we actually stayed back in the trend line, even though in the pre-market we jumped above the trend line, but the trend line stayed valid the next day because we held it, right? So that's why pre-market hours, like the trading in there, don't really matter.
Another thing I want to add is that pre-market, they don't have a lot of volume, so really the levels that you see don't really matters a lot. Like Ali said, the trend line is more consistent without the pre-market. And with pre-market levels, what you can do is you can trade based off of the break of the pre-market high or low. I know a few traders who does that, who scalp if the stock breaks either pre-market high or they short it when it breaks below pre-market low. But you know, that could be a hit or miss too. So just be careful.
So as Ben said, like the volume matters a lot, right? So this is what we talked about. So if there is not much volume happening in the pre-market, there is not going to be that much supply and demand. So that's why these levels matter a lot, because those are the levels that there was a lot of volume trading. And that's why we talk about dark pool a lot, because dark pool are the levels that a hedge fund or something, they're putting millions of dollars, 20 millions, I don't know, $50 million in that security, and then those levels become the levels of interest later. So yeah, that's it. Any good source for tape reading? I would say look into Sanglucci and Wall Street Jesus. They're great in that. I'm still learning about it. I'm not a master in tape reading. I'm learning about it, but I'm very interested into it. So yeah, it's but if you're interested, Sanglucci, I would say look into his videos and stuff. And we will go over it more and more as I learn more about it. And okay, quickly, Pitchfork. So Pitchfork is a tool, is not an indicator. We have different tools. We have the trend lines, we have the price levels. Pitchfork is totally made based on Fibonacci levels, and you take a low, you take a high, you take a low, and then it tells you a possible possible new trend of that security. So and then that's completely subjective based on what highs and lows you're picking. So you can take this low, this high, this low. Okay, so this might be the new Uber's path. Now if each one of these levels break, whether this break or this breaks, then we were gonna get a new move. So this might be Uber going up and up. If this one breaks, then we can see a new move down. Okay, and then you can do the same thing. You can do up, down, up. This might have been a play, but since this is broken now, you can say, hey, Uber is gonna actually go up. Uber is not gonna come down. So yeah, that's completely subjective based on the levels you pick, but they're based on Fibonacci levels, and that's how I sold right into that level in Uber. This is what I did. So I believe I did this, and this, and as soon as I saw that getting close to that level, go to like maybe 15 minutes. As soon as this level got hit, I sold into it, and you see they sold it back in. So this is where I sold 1/3 of my shares in Uber. Yeah. So any other question, guys?
I think that's pretty much it.
That's
So
it.
thank you, Ali. Thank you, everyone, for joining today's conference. We look forward to seeing you on the next one. Thank you, Ali, once again.
Thank you. Have a good one. Bye.